Hi, Dean Jenkins with FollowMeTrades.com, and this is this week's Beyond the Noise market update for the week coming up of December 11th, 2017. So I'm recording this on Saturday, the 9th. Well, the S&P 500 continued last week to put in all-time new high record closes. Hey, war on the Korean Peninsula, or potential war. Uh, Again, the war drum's beating on the Korean Peninsula. The U.S. kicking a beehive in the Middle East with moving the embassy to Jerusalem and making that announcement. Nearly averted government shutdown with a 2-week extension, and the Republican tax plan still in reconciliation. And you just keep going on and say, boy, there's all kinds of things that should make the market worried, and the band plays on, and it goes on to make new highs, and that's the reality. And you can find no end of commentators explaining why it should and will continue to go up, making a lot of comparisons to the dot-com bubble and saying why this is different. This is a rational exuberance versus irrational. That's all interesting stuff, but we try to cut beyond the noise and just look at the realities. Realities is, this is the S&P 500 daily chart. It's going up. It's in an uptrend. It's strong. It's well above all support levels, well above the Ichimoku cloud, well above the 200 simple moving average. It's in an uptrend, and it has not shown any sign of changing yet. But I always like to look a little bit deeper and see where are there any areas of weakness in the market. And I think we might have found one. So let me show you that. So I'm a news junkie, and I read hundreds of news articles every week. I don't trade based on what a particular writer or analyst says about the market, but I certainly use it to take my attention and focus it on areas of the market and see if what the reality is there. And I keep seeing articles, more and more articles about rotation from out of tech as growth stocks and into other sectors of the market. So here's an article from USA Today. It says, "Are tech stocks losing their top dog status?" From USA Today, source of all good hard news. And I just did a Google News search on tech rotation. You can go find several articles that talk about that, about a tech rotation, money coming out of tech and into other sectors. So that makes me go, let's go look at tech and see what's going on there, if there's any trading opportunities. I really like the website here, the SPDR. They got a handful of different sector ETFs, and they got some nice charts here where you can see at a snapshot what's going on with various sectors. And let me get it to the right page here on SPDR. So it's really nice. You can see this little bar graph, and you can choose your time frame. So let's look at a month and just compare these various sectors. And the S&P 500, of course, strong, up 1.61. Consumer discretionary, consumer staples rocketing in the last month. And lo and behold, technology sector is showing just a little bit of weakness. So that makes me want to look under the covers and dig a little deeper on that. So first thing we can do is just look at the daily chart for this ETF, or XLK. So here it is. Here's the daily chart for XLK, the Spider Tech ETF. And we do see it did not go put in new highs last week like the S&P 500 did. It pulled back, recovered a little bit later in the week. Kind of a sharp pullback here now, still well above support at the Ichimoku cloud at the 200. We do have momentum turning just a little bit negative. So if there's a correction in tech beginning, it's very early. It's not confirmed yet. But within this particular ETF contains about 73, I think it is, stocks. So within this, let's go find out who the weak players are and where the strength is. So I've loaded all the stocks that are held in the XLK ETF. Yeah, there's 71 stocks, and sorted and just did a real coarse thing, high level view, and said which ones are below the 200 SMA, which would indicate a downtrend. Just a high level view of a downtrend. And out of the 71 stocks, there are 12 that are below their SMA. And so that's certainly not a majority, but it gives us a place to go look. And so that may be actually a reasonable thesis that money's coming out of tech, at least some of the weaker players that are falling out of favor at least. and there may be some trades there to go take. Now, of course, the S&P is still in an uptrend. It's still going up, and there's still plenty of opportunity for long trades. I'm long a handful of positions right now. But again, always looking for when's the trend going to change, what would lead it down. And I think the tech sector has some potential. So I spent some significant time earlier today I had a webinar where we spent some real time digging through the tech sector and came up with a handful of really nice looking tradable charts to the downside. Again, I'm long also on some great long charts, participating in the uptrend, but there's some great short trades coming up, and some that are ready right now on in the tech sector. So that's worth checking out, and I have a link in the blog post where you can go watch that recording if you like. And again, in that video, I identify a handful of pretty nice trading opportunities if you'd like to check that out. Go ahead and follow that link. Let's go ahead and wrap up with a look at gold and oil like I do on every update. So gold had looked like we had a pretty good rally going on, but that's completely fallen apart, and it's heading down now. Now the big picture is this big move up earlier this year, and we're still above that, so we still technically have a higher high, higher low. But this is gaining some velocity to the downside, and not really touchable. I wouldn't be shorting it. There's some potential support down here coming up pretty soon, and I wouldn't be going long. So gold, no trades, and we'll just have to keep watching that market and see how it eventually plays out. Oil, we got the crude oil futures here on a daily chart. Have been in a nice run since really late spring, early summer, in a really nice move, higher highs, higher lows, volatile. As always, oil is never a smooth run, but it continues to make higher highs, higher lows, higher highs, higher lows. It's above all support, and it reversed up at the end of the week. So I think we could reasonably expect oil to continue higher. If we get above the highs from late last year here at about 59.86, let's call it $60. If oil breaks $60, it could continue up even more from here. So let's keep watching this. Oil in an uptrend and continuing. Well, that's it for this week. Again, S&P 500 in an uptrend continuing. There's good long trades there. We're in a handful of them. And potential weakness in the tech sector. We've spotted some good short trade opportunities there. And again, you're welcome to watch the video of the scan through that and the candidates we identified. Take care. Trade safe. It's never dull, that's for sure, in the markets. And we'll see you next time. Thanks.